Can you see me okay? Hello? I'm wondering if it's my internet that's messing up. Betsy, can you hear me?
Hello.
There you are. Hey, you're a
Hey.
little fidgety. Am I weird? Like, am I fidgety and pixely?
No, you're good.
Okay, on my side, I'm seeing you fuzzy, so I think my internet is messing up.
Okay, I'm hearing you loud and clear.
Let's try to walk through this.
Okay. All right, I'm loading it up to Facebook. You want to go ahead and get us started? Or do you want to restart it? All right, well, we'll go ahead and get started. We are live on Facebook. All right, well, welcome to Debt Free Knox. Our weekly webinar for talking about debt-free life and what that can mean for you and for your family. And we're just excited to be here. As always, Thursday nights are party time for Jordan and I when we get to share about debt-free life and all that it can mean. All right, and I'm just making sure that we are up here and that we are good to go. You know, with technology, always just want to make sure that it's working. Okay, yes, it is happening now. I'm seeing on my screen. Okay, as I'm talking to myself. This part is always a little awkward, so thanks for bearing with us through that first part there. And I'm going to get Miss Jordan back in. All right. Are you here with us, Jordan? All right, she's getting connected. Okay, well, I am Betsy Barr, and here in Knoxville, Tennessee, live here with my my husband and my two boys, and just a complete lover of debt-free life. It's completely changed my family's life. I've just been able to help so many families and businesses and churches with it, and just kind of seeing what it's able to do. Just brings so much joy, just to be honest, just brings a lot of joy in realizing what a difference it makes for the future for families. And so Jordan and I are both brokers with Symmetry Financial Group, and that's how we're able to offer debt-free life. And so we love being able to do that. We're so thankful for Symmetry for offering this vehicle. And so, yeah, so let's kind of go on as we think about debt-free life. Here's a question that we always pose is, are you 100% confident in your current retirement plan? And then secondly, what if you could eliminate debt in 9 years or less without spending any additional money? All right, and so we're able to go through on those, and so that we can help you get rid of that debt. Sorry, that is my kid's gizmo watch, and so I'm hoping that will not keep dinging as we continue through here. All right, so what we're going to be doing is teaching you how to reduce the interest that you're paying to lenders, erasing your debt in 9 years or less, decreasing taxes, improving cash flow. You can start saving money, and then able to retire with tax-favored income. And so we also like to share, this is not something new. It's not something that one day, you know, Jordan and I were sitting around like, let's just throw something out there, try it, and see if it works. This is something that people have been using for over 200 years. But it's primarily been those that are very wealthy in our society. And so just really recently, it's been made available, like in the past 15, 20 years, been something now that we're making available to more your just average American family. And so, you know, like I said at the beginning, for my family, this is giving us opportunities that we never would have had on our own. So Walt Disney used it to finance his parks. Doris Christopher, Ray Kroc with McDonald's, Warren Buffett, J.C. Penney, the Rockefellers. We can go on and on about how people use a debt-free life type product. It's the idea of compounding interest using their money in that way so that they can kind of build for their future. All right, so we're going to talk a little bit about knowledge. So we all kind of start from the same point of knowledge. We can make good decisions from there for kind of everybody can make the decision that's best for their family. So when we think about life, we all go through this game of life, and you know, you grow up and go to college, maybe get a little student loans, get a car, have an auto loan, then get a house. That's a nice big old loan right there. And then kids come and they need things to, you know, grow and live. And so a lot of times as people go through life and are achieving the things that they want to achieve, when they hit retirement, they find, oh, we're still in debt. All right. And that can be a problem because it's keeping people from having the retirement that they're hoping for. So as we look at the debt epidemic here in America, you know, we can break down those numbers, but basically we're looking for 2019, the total debt was 13.6 trillion. And that's only going to be bigger when we analyze the numbers from 2020 as well. If you look at your average American household, the total amount of debt is usually about $250,000. And then the way that each dollar is broken down, we've got 34 cents of every dollar is going to interest, paying interest to lenders. That's a lot. And then you got 40 cents out of every dollar is going towards taxes. Now this could be sales tax, it could be gas tax, income tax, all the different kinds of taxes. When you add those two together, that's almost 3/4 of your income is going towards interest and taxes. And that leaves 23 cents out of every dollar just for your lifestyle, the things that you need, clothes, food, you know, roof over your head. And then 3 cents out of every dollar is going towards savings. And so when people think about, oh, you know, if I could just put more aside for my savings, I'd be able to do better in the future. You know, most of the time people are doing the best they can already, and 3% is sometimes all that people can afford to, just because it's either that or groceries, and you know, we tend to want to feed our kids. Here's what we do though with Debt-Free Life. After using the Debt-Free Life program, your debt is zero. You have $0 in debt. Okay, that's what we do. We help get people out of debt, and so what that means then is we can shift those numbers around. Okay, so instead of paying 3/4 of every dollar going towards interest and taxes, only about half of every dollar is going towards interest and taxes. We're going to increase the money that you have to spend on your lifestyle. And so what that means is that you can get all the things that you need for your family, and then you can also get some things that maybe you really wanted, but you never thought would actually be attainable. And that's exciting, right? Like you can think, oh, I never thought I would be able to provide this for my kids, but because of Debt-Free Life, I'm going to be able to do that. That's what Philip and I, my husband, we're realizing, like, hey, if we use our Debt-Free Life program, we might be able to get a pool for our kids, you know, or when they go to college, we're going to be able to just help pay for their college. And so they won't have to have student loans. You know, just all of a sudden, these things that we truly want to do for our family, now it's becoming a reality. And then look at this now, 15% of every dollar is going towards savings. That means when I think about like our retirement, we're going to be able to save so much so that when we retire, we don't have to worry about where's the money going to come from that we're going to live off of. So, you know, talking some about retirement, if you look at your lifetime income, it's usually about actually $2 million passes through your fingers. But then if we're saving 3% of that, that means that at retirement, we've only got $60,000. And so for most people, that doesn't kind of fit with how they envision their retirement. And so, you know, just you can kind of pause and think, hey, what do I want for my retirement? What are my goals? What are things that I hope that my family can do? And is $60,000 going to be enough? And if not, we can talk about how we can help you get enough to be able to do what you want to do in retirement. So here we talk some about how banks leverage cash. So when you go into a bank and you put money into the bank, maybe $100, then the bank is gonna, if you're really good, you got a really good interest rate, they might give you 1% back on that $100. So the bank's gonna give you $1. But now the government says, hey, the banks can use that money 7 times. So if you're giving them $100 in your savings account, the bank can lend out $700. And so they can get all different kinds of interest rates on that $700. Some of it could be 24%. And so that means that the bank is getting back 24% for every $24 for every $100 that it loans back. And remember, they're only paying you $1. Another loan, maybe they're getting $5. Now they're getting $18 for this different loan. So they've got all this money coming to them, and they're just paying you $1. And so here the bank is earning money. I mean, it's a business. It's got to earn its money. But so what we do with Debt-Free Life is we help turn you into the bank so that you're the one that's earning all that compound interest. And so speaking of compound interest, we look here at a quote from Albert Einstein. It says, compound interest is the 8th wonder of the world. He who understands it earns it, and he who doesn't pays it. And so I love doing this little activity with my students when I taught high school algebra, saying, hey, would you rather have $1 million today or a penny doubled every day for 30 days? So, kids will split up into groups. Who wants $1 million? Who wants a penny doubled every day for 30 days? Most kids would choose $1 million. And then, you get a couple people that said, oh, I'll take the penny doubled every day. And then we started comparing it. After 10 days, though that small group of students, they had only $10. And then after 20 days, though, because this is doubling every day, okay, that's what the power of compound interest is doing. Now by day 20, they've got $10,000. And then by day 30, they're all the way up to $10.7 million. Hey, Jordan! And so here we see that the power in compound interest is that it just keeps doubling, it keeps doubling. And so what we do with Debt-Free Life is we make compound interest work for you so that you're earning that instead of having to pay that out to your lenders. And so Jordan, this is just perfect. Welcome back. And hey, we just make it work, and it's your turn. So this is perfect.
Yes, I love it. So first off, I want to say thank you for being awesome and helping me, pick up the slack when my internet decides to stop at 6 o'clock. It's no big deal.
Technology, girl.
I bet somebody's just outside, like, canceling my internet at the moment I need it the most. My name is Jordan Gillum. I live in Knoxville. I am so grateful to be working alongside of Betsy Barr, because she, not only does she carry any weight that I drop, but she is also one of the kindest people that you will ever meet. And so, one of the things that she and I both see in this is the opportunity for anybody, no matter how big of a problem, how small of a problem, that you can accomplish what you want to accomplish with guarantees. And I'm going to show you what that looks like. So Betsy should have just laid some knowledge on you guys. You should know a whole lot more about, money, compound interest, how banks are leveraging their cash flow, the level of debt that the United States is in, and why, because this fun game of life that we all are in, where, it sounds like we're going to make a lot of money if we have a lot of kids, but turns out we just accumulate a ton of debt, and then the U.S. is in terrible debt. So let's talk about debt. All right. Let's talk about how Debt-Free Life has helped an actual family get out of debt. Ooh. So this is our family, our little mock family. This is a real family we're talking about, but we're going to use this picture and these names just for the sake of protecting their identity. So this is Mark and Joyce. Mark and Joyce are in their mid-30s. They would like to retire, just like the rest of us, right around mid to early 60s. So they've got 30 good years of really putting in the hard labor to prepare for those years. They would like to retire on $5,000 a month, which, as Betsy's also laid on you, is about the number of assets in 1 year that the average family is finding themselves at 65. And so they have 3 kids. They have an IRA, like most of us do, right around this age. They have less than 100K in it. They would like to plan for a great future as far as being able to live on at retirement $5,000 a month. But when asked, what plans do you have for this? They said, we don't really have a plan for that yet, which is okay. Because that's normally where most families are. When you're in your mid to early 30s, you know, you find yourself in this place of, I have a feeling I know what I want, but I'm not exactly sure how to get there. So that's what's so cool about Debt Free Life. You know, we get to talk to these people no matter where you are in your life and what kind of plans you've already made. Now, have they saved up for their kids' college savings? No. Now, their main concerns are pretty typical. Excuse me. They're eliminating their debt, which we're going to look at here in a second. Sorry, I can't read it so tiny. Controlling their spending, saving for their retirement, establishing some type of will and trust, providing their children or their grandchildren's education, as well as maximizing on their savings, which is a lot. You know what I mean? Like if you were to put all those concerns in a basket, it'd be a pretty full basket. Thankfully, Debt Free Life is one of those things that hopefully can check all those boxes for them. As far as their finances and what they've prepared for emergencies in their future, they have an emergency savings account where they're contributing $25 a month, which is right around, you know, that 3% range that Betsy was talking about earlier. They've currently got $6,000 in there, and then they have a Fidelity 401k, which is through their employer. That's about $36,500 that they're contributing $150 biweekly, equaling about $300 a month. Now let's see what they're up against as far as some pretty standard hurdles. This is going to look very familiar to a lot of us because this debt, you know, one thing about debt that we have found is nobody likes talking about the debt that they're in. And I mean, so that's why, you know, I mean,
no, it's uncomfortable. It's uncomfortable.
It is so uncomfortable.
It's uncomfortable.
This is really the hardest part about what we do when we help a family is really, you know, to solve a problem. It's halfway solved if you know the problem as it really is. Yeah. And in this debt, can we all agree that debt is a problem? So as you can see here, there are 2 credit cards that this family has. They have medical/dental debt. They've got a furniture loan, an auto loan, and a mortgage. Pretty normal, right? When we ask our families, you know, this is the painful part. Hey, can you tally up and add up for me how much debt you have? This family says we have $180,000 of debt. We pay $21.77 a month out of our $7,000 a month income combined towards these lenders and creditors. And then our average interest rate is around 10%. Now, remember, I just said that half of accomplishing and figuring out a problem is understanding the problem as it really is. So we have to do some compound interest math real quick. So let's see what they're actually up against when it comes to accomplishing their goals in their future. This family is actually in debt an additional $200,000.
Ooh.
Not good. Yeah. So when they look at that, they say 180. Yee, that's not good. Well, in reality, it's actually 380. And that's because of compound interest. When you understand, like Einstein is accredited for saying, he who earns it pays, or he who earns it is on the winning side. He who pays it is definitely on the losing side. I know he didn't say it just like that, but we all get it. But we're not on the winning side at this point because we're paying the compound interest. Mm-hmm. And it looks so much worse when you really show it as it is. But a lot of the times we like sweeping that part under the rug and just looking at the dust on top of the rug. Mm-hmm. So this is painful, right? Let's also take a look at what their retirement's going to look like. So we like doing math to project the future because, I mean, that's all we can do. We can't really accredit for what the market's going to do, but we can apply some standard math to say, let's say your 401k grew at 5% annually for the next 30 years, your tax bracket didn't change, and you kept contributing what you contribute right now. By the time you reach 65, which is your retirement goals, you would have $408,890 before taxes. But then Uncle Sam comes in, he takes the sandwich, which is your retirement, and he takes a quarter-sized bite out of it, and then now you actually only have $306,000 after taxes. So this is important to understand because when you look at a blueprint, you look at a plan, you have to know where you're going. You have to know what turns you're going to take. And so we like showing people, okay, you're up against $380,000 of debt. And if you go the way you're going with any guarantees whatsoever, let's I mean, if we're going to provide some conservative numbers, here's what you're going to have at retirement. Is this exactly what you want? And they say yes or no. That's how we help each family. And then we show them what debt-free life's going to do.
This is the awesome part.
This is my favorite. So debt-free life would take the same exact family and get them out of debt in 7.8 years. What?
Ooh.
That's what I have to say. Boom. 22.2 years sooner than they would have without debt-free life, saving $122,000 in interest, increasing their retirement savings by that same money that would have been going to creditors and lenders for 30 years. And once it's opened up and it goes into their savings account, not into a lender's hand, then they're going to save over $1 million in 30 years. Now that's what I'm talking about as far as debt-free life. That's a win. That's a win on my part.
That's a win. I mean, that's tax-free liquid cash, like not somewhere where hopefully you can get, I mean, that's like just cash.
No, that's the, guys, this is down to the dollar. And the reason why it's down to the dollar is because we know this is guarantees. This is simple math. This isn't an investment. This is simple math of what we can do for this family. Now, remember, we like showing you where you're going now, and we like showing you where debt-free life can take you. And then what do? We compare it, and we call it opportunity cost.
Right.
So what would be the opportunity cost between not doing and doing debt-free life? $820,000. So Betsy, what are some benefits of doing debt-free life?
Oh, I mean, honestly, we could do like an hour on just benefits. So I keep it short. And honestly, I feel like every time, Jordan, I meet with a family or like a business owner or a pastor, there's more to add to this because everybody comes up with like different ways that they can use it. And a lot of times I'm like, that is an awesome idea. Oh my word, I'm going to go tell other people about that. So I think it's really cool how, different people just kind of add in new ways that they can use debt-free life. So, but of course, first of all, you just got peace of mind. I mean, we're all living in crazy times, right? Like these are kind of crazy times. And so a lot of us don't have kind of peace of mind about, we're all trying to kind of figure out, hey, what are best choices for our families right now? And all of that. And having peace of mind can be a really big deal. And so I know for Philip and I, when we moved into this new house and we're so excited, but we're like, okay, now we have this mortgage and now we have these things that we got to prepare for our family in the future. And so when we sat down and kind of plugged everything into our debt-free life program, I mean, we had peace of mind. I mean, and not just peace of mind, like we got so excited because we were like, hey, because of debt-free life, we're going to be out of debt before our kids go to college. My son is 9. So, I mean, we'll be out of debt in 9 years. When he goes to college, we'll be debt-free and we can help him pay for his college. I mean, that's peace of mind right there. We looked at where we're going to be when we hit retirement in about 30 years. We have peace of mind. We're going to be able to do anything that we wanted to. I mean, we could retire early just because of our debt-free life program. So, I mean, I think for me, like that's where I'm living right now. Like, hey, I've got this peace of mind that I didn't really have before. And so, I mean, that's a big deal. When we go through a program with a family, we kind of help them kind of look in their budget. How can we really maximize all the resources, maximize your cash flow, dramatically increase your savings. I mean, that's a pretty big word, but I mean, $820,000, that's pretty dramatic too. Of course, getting out of debt, prioritizing accounts. And then because all of this is happening with money that you've already been taxed on, anything that we get when we retire, it's already been taxed. So it's tax-free. We can use it. And that's pretty exciting. I don't have to wonder how much the government's going to take out when I'm 65. I've already paid taxes on it.
Oh,
so that's pretty sweet. So kind of here talking about, hey, what does this process look like? Like Jordan said, hey, we need a plan. And the first step is saying, hey, where are you? And so we look at the debt, and you know what? I know that's uncomfortable. I mean, we've talked with people and they're embarrassed. I mean, and it's okay. We're not here to judge. I mean, like I said, I have my own debt-free life program. I mean, like, we just bought a house. We had to get furniture. We've got to get things for our kids. I mean, this is not something that we're not doing as well. And honestly, like, we look at the debt, and then I just get excited because I remember talking to one lady and saying, hey, this right here, we're going to get rid of all of this debt. And then she was in tears, and I was able to say, hey, those can be joyful tears, because we're going to get rid of this debt. And we were able to in like 4 years. And so, I mean, that's what we're able to do with Debt-Free Life. And so we take this situation where people are feeling shameful and feeling, oh, I don't want to talk about it, it's so uncomfortable. And we say, hey, we can make a plan to get rid of all that debt and take away that kind of burden, that weight, and we're going to give you that peace of mind instead. And I love being able to do that for families. And so, anyway, sorry, so I can get off on a tangent.
No, you're fine. You're fine. I love it. I feel like I could just sit here and be doused with a fire hose by you all day long.
Oh, you're so sweet. You're amazing. Anyway, so then we kind of make a plan. So we look at, okay, here's where we are. Here's the situation. And then we look at, hey, what's the budget? Are there any funds that we can kind of reallocate? And so that's why we say that you're not spending any additional money. So we're not asking you and saying, hey, just find extra money in your budget. I mean, if you had extra money in your budget, you would probably already be saving it or spending it, on your kids. So we're looking for money that you're already spending, that you're already using, and that we can redirect. Okay. And so this is not something that you're going to have to add something to your total monthly budget. So we really, really like to be clear about that. And then I mentioned this earlier, we're going to maximize resources. Jordan, do you want to talk about the car?
Yeah.
I've been talking about a lot tonight.
I am so glad you're letting me do this one. I have watched in awe of you explaining this, and I'm like, one day I'm going to be able to explain.
Girl, it's all you. It's all you.
Yes. So let me explain how Debt-Free Life works.
Go for it.
Guys, I am so excited about this. So you want to buy a car, and you have $20,000 to spend. So how do we maximize? Maximize is the key word here. How do we maximize on this $20,000, right? So here's the traditional way that you buy a car. You got 20 grand. There's a car in front of you that costs 20 grand. You exchange cash for car, and then you have car, but you have no cash. Not bad, standard purchase. But what if we could maximize on this 20 grand, right? So let's say we take same 20 grand and we went to a bank. Let's call it your bank, right? You went to your bank. Your bank had a CD available that guaranteed you 4% compound interest on your $20,000. You gave them your 20 grand. You said, grow my money. But then you went to your same bank and you took a loan from them so you could have the cash to buy your car. And the loan is at 5%. Now, I know what you're thinking. 5% is more than 4%, but just follow me here, right? So now you have car. You have given 20 grand to someone. You have a loan for 20 grand at your bank. Meanwhile, the 20 grand in cash that you had originally is growing at 4%. So let's look at what your 20 grand that's in that CD is doing. At 4% compound interest, y'all. We already talked about what that looks like, and the penny that doubles every single day that goes to $10 million in 30 days, right? In 5 years, so at the end of let's call that $20,000 loan that you had, let's say it's a 5-year loan that you had. At the end of those 5 years, your 20 grand through compound interest is going to gain $4,333.06. So now you don't just have 20 grand, you have $24,000 here. But then you've got your loan that you've been repaying back, right? Let's take a look at what that 5% interest, compound interest still, but it's a decreasing loan because you're paying it off. So you're paying off this loan at 5%, and the interest that you paid on it is actually $26.45.52. So do you see what's going on here? So technically you had $22,000 leave your account, but you still have $24,000 in that account. So you actually gained $1687.54 in interest. So what does this look like? So basically, you paid 20 grand for cash for a car in option A. And at the end of 5 years, you have $0 from your principal, from your 20 grand, but you have your car. Probably need a new one because it's been 5 years. But option B, watch this. After 5 years, you have the car. You still have your $20,000 from your principal in that CD, and you have an additional $1,687.54 from compound interest working for you. Right? I like option B because, you know, still have my money, and I earned money, and I got a car. So that's how you maximize on some resources there.
Yeah.
Now I know what y'all are probably thinking. Where can I find a CD at 4%?
You can't. I've looked. I've been looking.
Yeah, because we've all been looking. Yeah, no, we all are always looking for the safest, biggest way to grow our money, right? Mm-hmm. So what's the best financial product, would you say, for debt-free life? If there wasn't a CD that could get you 4%, then what would be the best financial product? Do you want me to explain the best financial product, or you want it?
Go for it, girl. Talk to us about it.
I feel so special today. Woo! So for the best financial product for debt-free life, what are we going to need this thing to do? One, we need guarantees. We need guaranteed growth. I know you're probably thinking, well, that doesn't exist. Well, follow with me. Access to cash with no fees or penalties. All right. Flexibility in your contributions, being able to repay your loans that you're taking from the bank, and, you know, whatever premium that you can contribute towards, you know, being able to build this thing up. And once again, like we were just talking about, being able to maximize on those resources. So we've looked at a few financial products out there to say, what can we use to make this happen? A savings account is not going to give you guaranteed huge growth. Mm-hmm. You know, that CD, that 4%, name one savings account that grows at 4%, I'll wait. CD also, no, doesn't do the 4% growth. Stock market, no guaranteed growth. There is flexibility in contributions for the stock market, which is good, but it doesn't allow you to have those guarantees of no loss. And then with investments, a lot of the times you're dealing with fees and penalties. So we found that none of these are working. So what does work is a cash building life insurance policy. Now, this is not your grandmother's life insurance policy. This is one of the most top tier insurance that's out there. So with traditional life insurance, like if you look at traditional life insurance, when you contribute as you get older, your contributions, your cost of insurance goes up. Mm-hmm. But also what ends up going down is your cash value and your death benefit. If you don't fund it enough in your future, then you will lose on your cash value and you will lose on your death benefit. That's what a traditional life insurance is like. But when we use these high yielding cash specialized DFL life insurance policies, take a look at this. It's the way we want it to go. Your contributions go down as you get older and even get paid up. They also, you know, you don't have to keep paying on it because it has such a high cash building inside of it. And your death benefit and your cash value exponentially grow as you pay off your debts. It's insane. It's compound interest. No, so yeah, so we're huge fans of DFL life insurance. It is special. It is perfect. It checks all the boxes for our families. Yep. So I believe we got the buckets next, or no?
Yeah.
Sorry, Betsy always makes these better and better and better. So I just want to make sure I'm following.
It's like, what did you check?
No. Yeah. I'm just making sure I'm making this. I want to deliver exactly how you want it to become.
No, girl, you are doing an amazing job. You want to talk about the bucket?
Yes, I feel so
I love it. You're doing
I love it. So yes, how about we maximize on some resources, guys? How do we use every dollar twice? We take dollar. We put said dollar in specialized DFL policy. We call it a contribution. It's not really, it's a premium, but it's more of contributing to you. So when you contribute to let's say you got 10 grand. You take 10 grand, you put it in your specialized DFL policy, right? And you needed to take a loan for $1,000. You needed $1,000 to do something, right? So you take a loan from your DFL insurance policy. Now you have cash. You got $1,000 in cash. Now what happens? Right? Your death benefit is used as collateral in order to obtain your $1,000 loan. right? So that's how you qualify for obtaining your loan.
Mhm.
Your cash value is your credit limit. So you could take up to $10,000 out of this, but you only need $1,000 right now for your loan. So now you've got your $1,000 loan. Your policy is still earning compound interest on the $10,000 while you're using your $1,000 of cash.
Woo!
So what's up? That's awesome. So your dollar is still earning compound interest. It's earning interest and saving for the future while you are paying off and financing your future purchases.
Woo!
Can't beat it. It's better than a loan because it's already your money. So it's technically, you're not loaning from somebody else's dollar they put in the bank. That's your dollar in your bank. But it's better than a savings account because it's earning interest on the amount that's in there, even when you're using the money. Win-win.
I know. This is the part that I think gets where people are like, oh, they really see the value of it. Like this kind of policy, like this debt-free life, you know, if you just kind of get it and then you're like, oh, I'll you know, I just have it for my death benefit. I mean, that's useful and that's helpful, but it's not really maximizing it, you know. So the real value to families comes when they actually get this policy and they use it for taking out a loan. They kind of use it as their savings account. And the more you use it, actually the more money you get in retirement. And that's, so like what I was saying earlier, you know, you can get the things that you need for your family, and then you can get the things that you want for your family as well, that you maybe thought, hey, I could never do this. Well, if you actually use your debt-free life policy, like you're actually going to get what you want for your family, and then it increases the amount of money that you have for retirement. It's like, it's so counterintuitive to what we've kind of been taught our whole lives. And I still am just like, how it's so amazing. Like it's just so amazing the things that it's able to do and the way that it works, and it's all math. So I get all nerded out because it's so exciting. It uses numbers. But that's how we can say, hey, we're helping the numbers and the compound interest work for your family instead of against it. You know, hey, you can get the things that you need, that you want for your family, for your children, for your future, and you're just putting yourself in a better financial position when you retire. I mean, so it just does so many things. You know,
yeah, no, that's strong work right there. I love that.
Um,
So, do you want to finish? You go ahead.
Okay,
I mean,
sorry.
I feel like you put me up here today. So, I mean, and I didn't mess up. So, I don't. You're good. I think you're good.
You're doing great. I mean, this just kind of, you know, kind of compares here again. You know, if you've you know, if you want to pay off debt, you know, your first option, just like with a car, you know, it's pretty straightforward. You can just, you know, you get that $5,000 in cash, for instance, and maybe you take a second job, you work longer hours, you make sacrifices, and then you pay off that debt, but then you don't have those $5,000 anymore. But by using a debt-free life, specialized policy, we call it your bank, your debt-free life bank. When you accumulate that $5,000 in there, you can borrow that from yourself, and then you can use that to pay off your debt, and then to prepare for your future. And what we actually do, some people have heard of the debt snowball effect, where you pay off one small loan and then take that and put that money towards your larger loan. So what we actually do is we combine those two things. So we take the debt snowball effect, which is great, but it doesn't, but just a lot, just realistically, when families try and just do the debt snowball, it's not always successful.
Right.
Just in kind of looking at the statistics, is not always super successful. So we take that and combine it with this compounding interest in the debt-free life policy and put those together, and the success rate for the debt-free life policy is 94%.
Woo.
And so that, I mean, that's pretty telling just in itself right there. So we leverage these financial tools. We redirect money into the debt-free life bank that you're already using. That money is growing with guarantees. I mean, that's key here. You know, your money is growing. There are guaranteed growth. You can't lose anything. You can only go up. You can borrow from it with no penalties or taxes, pay off your debts, repay your loans with freed up cash flow that then makes your retirement go even higher with compound interest. You can finance future purchases. And then, since it is an insurance policy, when you pass away, all of that goes to your beneficiaries tax free. So, I mean, what can they do with all of that? You're creating this generational wealth. And so, again, I mean, like, I've never had somebody say to me, can I use this? Can I use my debt-free life policy in this way? And I've never said no, but I'm like, yes, you can use it that way. It's amazing. I mean, it's just pretty awesome what it can do. So, anyways, Jordan, talk to him about their decision moving forward from here.
Right. So, it just comes on, that's really what it comes down to. Knowledge is power when you apply it. You've seen what this can do for debt. You should have at least a general understanding as far as how debt-free life is used, what vehicle we use to maximize the dollar, and basically use compound interest to, like, I don't want to even say jumpstart, like turn on the fires for your future. You know what I mean? We want you to retire unlike the average American. Okay, so it comes down to your decision. And what we get to do, thankfully, is we get to share with you guys some real life testimonials from families who have used debt-free life and what this is going to do for their future. So we're going to watch a couple of these together.
I did not have these up, so that's my bad. I'm sorry.
It's okay. No, that's okay.
Let's get it up here. And okay. Oh, I need to change the share.
Yeah, I actually, when I used it, when you weren't here, all I did was click on it and it took me straight there from that PowerPoint.
What?
Okay, we are so excited. So what is your name, ma'am?
Alejandra,
Very good. And where do you live?
Miami,
You live in Miami. How much debt you carrying right now?
around 500,000.
Okay. And if you keep going the way you keep going, how long is it going to take you to get out of debt?
Like a 21 years.
21 years. And with debt-free life, how is it going to change? How soon are you going to be debt-free?
3 years and 7 months.
Oh my God, I love that.
Safe.
Around $100,000.
Wow.
Too much money.
Wow, over $100,000 on interest saved. And what is your current debt?
Around 500.
Around $500,000. That is unbelievable. And how about your retirement income? How much are you going to be able to save for retirement?
$3 million.
Over $3 million.
It sounds so big number for me.
How does it make you feel to be able
Wow,
to
I feel like God blessed me big time, and for me and my husband, it's going to be a big deal in life.
Wow, that's a huge change for life, and it was God's hands, and I'm so proud. I'm so excited for you.
Thank you. We are so thanks.
I love seeing people excited talking about debt. That never happens.
Oh.
What's your name?
Oh, here. This is a good one.
And Amanda Hopkinson. And where do y'all live?
Hagerstown, Maryland.
How much debt are y'all carrying?
$161,398.
Before debt-free life, how long would it have taken you to pay off your debt?
About 38.2 years.
Now, with debt-free life, how quickly will you pay it off?
8.9 years.
And how much interest will you save?
$28,220.
How much retirement income will you create?
$1.4 million.
Last but not least, how does this make you feel?
Pretty amazing.
That is pretty amazing.
I love it.
Actually, I've got one of the families that I helped. I just got my debt-free life testimonial back from them, so I can't wait to share that soon. So that's going to be awesome when we get to do that.
That is so exciting. I want to get back to, just finishing this out so that everybody can go back to their day.
Yeah. Sorry, we could share this all day, right?
Yes. Oh my gosh. But look at this. Look at this, y'all. In 3 years, the few of us who have branched into debt-free life with Symmetry Financial Group, there is not a whole lot of us doing this. And there needs to be more, first off. And there is constantly people we are being reached out to all the time who want to do this for their communities. And please reach out to us. We need as much help as we possibly can get. And they need someone. Everybody needs someone to help them design their future to get out of this average loop that we're all in. Mm-hmm. But in 3 years, Debt-Free Life, in just with Symmetry Financial Group, has helped families save over $171 million plus in interest. That's money going back into their hands. That's not going out, that's in their hands. And look how much this improves their retirement. There's projected retirement savings of $1.4 billion plus.
With a B.
With a B. $1.4 billion projected to help people retire the way that they deserve, the way that they've worked so hard for.
Crazy.
With standard guaranteed math, not an investment. You know, we are not financial advisors. I do not carry a securities license. We just know that there is a vehicle that families are using to be able to help them retire the way they deserve without Uncle Sam taking a huge bite out of it when they hit 65.
Yep.
And it's awesome. It is just so awesome. So if this sounded wonderful and was music to your ears, the hope that you've been looking for to help you get out of debt, sign up and talk to us, because we do understand that debt doesn't feel good. We do understand the stress, the physical toils that you go through with the amount of stress that we've all accumulated in our life. It's just sitting right here in our shoulders, and we carry it every day. And to get out from underneath it, if you want to get out from underneath it, go to calendly.com/debt-free-knox and schedule a quick time with Betsy and I. We'll take a look at your debt. We'll see what Debt-Free Life can do for you, and we'll weigh out the opportunity cost. And we'll just say, hey, what do you want to do? Because with knowledge, it's only power when you apply it. And we do this every Thursday at 6. Betsy has actually expanded Debt-Free Knox. And Betsy, why don't you tell everybody about your expansion? Because I'm excited. I'm excited for you.
Thank you, Jordan. You're so encouraging. So we have a new home office because in our new home, and so we're just wanting to use that more to help more people and impact more people in our communities. Just because we are so passionate about it, we see how much it can help people. And so every Tuesday at 12 p.m. Eastern Standard Time, we'll be hosting a webinar that will focus primarily on how Debt-Free Life works for churches and nonprofits as well. And then on Thursday, and I do that one with my husband, who's a church planner. And so that's just kind of our heart and a way that we see that we can serve churches in our community and around the United States. And then on Thursdays at 12 p.m. Eastern Standard Time, Ken Mallard, another one of our partners here at Symmetry Financial Group, he and I do a webinar on how Debt-Free Life can be used for businesses. Small businesses, larger businesses. And so you can sign up, find out more information at debtfreeknox.com, and we'll also be posting them live to Facebook. So lots of ways to get in contact. We just want to, the first time we talk, we just want to have a conversation here. What are your goals? What are your dreams? How could we help you achieve that with Debt-Free Life? So thanks for joining in. Thanks for letting us share our passions with you, and we look forward to connecting with you soon. Have a great week.
Bye, y'all.